Floridians have a great ability to forget about storms, right? It's short-term
Well,
memory loss
nobody
when it
moving
comes
from
to these.
Boston, they don't know. You know what I mean? They're moving down to, oh yeah, the property got hit back then when in 2000 whatever. But okay, it got hit, it got rebuilt back, and I just gotta be careful with the next one that comes around. You know what I mean? Like, um,
So we're
so
we're, we're just here praying that we get through this hurricane season, which got about another 30, 45 days left, and then we'll hopefully not have any storms. And again, that helps, right? Because it was tough, man. When we got hit with these storms, it was just a lot of folks that on the beach areas that just really got affected, man. It was sad to see. We've got several properties down by the beach, and we're down there, mitigating our investments, but you saw people's whole lives on the curb. You've seen it, I'm sure, because you saw the storms in Houston,
yeah,
brother. It's heart wrenching to see, the loss and devastation that a natural disaster can
yeah, and the
bring.
prices are all over. I'm looking at one right now in Hudson. It's a lot. It's $184,000. So you got it for less than lot value, pretty much. If it's that
Yep.
same area,
Mine's on Second Isle, so it's really close to Hudson Beach.
Yeah, so I'm looking at one that's called Skeleton Key and Signal Cove and Leisure Beach. I don't know. It's all Hudson in there, but
Yeah.
And so that's so based on that strategy, you will buy rehab, put a renter in it. Will it cash flow positive, or will it just kind of like break even?
That one will cash flow about $600 a month
after a DSCR loan on it,
and all my money's back, dude. 425 was the value. It's our after repair value, and I get 75% of that. So all my cash is back out of that property, and I still cash flow.
Not only that, I forgot that rentals over there are cheaper than, and also the taxes over there are cheaper than what we have here. So for us in the area I live is 3.8% taxes a year. So if you have $1 million home, it's $38,000 you're paying on taxes. So it is wild. So so over.
We're not there yet here.
1%. Like it's 1 point something. I forgot.
Hopefully soon we won't even have property taxes in Florida anymore.
Man, you know what? I think that'll be amazing because that's going to stimulate the economy. Like you have and the same thing is somebody's trying to pass the same bill in Texas as well. So hopefully it'll pass, because sometimes there are properties that I like, but with my experience now, the properties I wanted to flip didn't sell, and the properties I wanted to rent sold. So I gotta, when I rehab a property, it's gotta be for both things, like rental and flip, just because I just don't know what's gonna happen. And
I tell you, that's our strategy with every acquisition, Ricardo. Multiple exits. If it doesn't have multiple exits right now in the market that we're in, we're not buying it, because I can go in with the intention of flipping. But if I've listed for 30 days and it hasn't sold, and I got to keep dropping, then it becomes a losing asset. Well, when I hold and it doesn't sell for 30 days, but I already got my DSCR going, I already know that I can rent that property, get all my money back out, then I can immediately pull the trigger and say, okay, 30 days on the market, let's go. Switch it from active sale to rent, and let's go ahead and get the DSCR process started. So that's been my strategy here ever since we saw the market start to decline, and especially us after that storm.
You do any owner financing?
I will. It depends, right? It really, really depends. For me, more than anything, is the lease purchase. So owner finance, I'm not trying to give them a note. Then I got to foreclose. Hey, if you want it, we can lock you in on a price today. We'll do a lease with the option to purchase. Because at the end of the day, if they stop paying, even if they're giving a little bit of a down payment, I can just evict them. I don't have to go through a whole foreclosure and deal with all of that.
Right. I've done owner financing, and honestly, I don't think I ever had to foreclose on anybody.
That's good, because I've done it and I've had to, and
no,
it stinks.
I haven't had to do that. I think one time we had a guy that defaulted on a loan, and he was so embarrassed by it that he just signed all the paperwork back, and it was easy.
to
Yeah,
give
we
it
didn't
back.
really like. He was embarrassed by it, but there
Mhm.
are properties that I would rather own or finance than rent. Maybe because they're far away from me, and you know what?
Mhm.
Let somebody be the owner of that.
Sure,
And
sure.
so now let's move forward now to what you're doing today. What
Yeah.
are all the things that you as an investor you're doing today?
So, fix and flip is still something
Right.
that we do, right? We just mentioned that. So we're acquiring with multiple exits, whether it's fix and flip or building a rental portfolio. I also, because of the line of work that I'm in and being a contractor, we do some construction work. We've got a construction business that supports us, but sometimes we'll go out and we'll add value to people within our community or other investors and do some construction work for them. So that's another stream of income. And then we have ALH Lending, which is our hard money lending platform, where we can do straight hard money internally based off of a fund that we have. But we can also provide institutional loans for investors like fix and flip loans, DSCR, new construction, and those things. So we've got that avenue. And then I've got CG Real Estate Academy, which we do some fix and flip education.
Okay, so what does somebody need to do to get let's say I want to get qualified for a harmony loan. Like,
Okay.
can you tell me about the different, programs that you have? If you have one for landlords or one for fix and flippers, or what does that look
Yeah.
like?
So for fix and flip, let's start with fix and flip, right? So if you're a fix and flipper, you've at least done 2 successful fix and flips over the last 3 years, right? So you've got your feet wet, you've done 2, they've gone well. Now you're looking for better terms. Maybe you started off with straight private money, like we do. We offer straight private money for beginners, but it's expensive, right? But you've got that experience. Now you're stepping into your third. We can offer you 90% of the acquisition price, which is only 10% down, and then 100% of the construction covered in
Okay.
draws. So now you're getting into a fix and flip loan with very minimal out
Right.
of pocket. What does that do to your cash on cash return? Shoots
Right.
it up, right? Shoots it through the roof. And it mitigates your risk as well, because instead of putting so much cash into one deal, now maybe you can do 2 or 3 deals at the same time. So these fix and flip loans are amazing if you utilize them right. Some of them even come with deferred interest to the end. I mean, there's just a lot of cool things with these fix and flip loans that I benefit from myself as a flipper because I leverage all my assets and acquisitions, but we're able to offer that out to other investors. And then at the same time, if they decide that fix and flip loan because they got in it right, they want to keep, then we can transfer right into a DSCR 30-year fixed loan. And we just got somebody approved at like a 6.3. So the rates
They're
aren't
coming down. They're
horrible, man.
coming
It's a
down. I
30-year
heard the
loan.
feds were going to
They're
lower it.
coming down.